Can you guys see me? Hey, what's going on? All right, great. I had to get I've got a problem with my computer, so I had to get a new battery. Yeah, I'm pretty late. I had to order some batteries for my computer. Yeah, I wish. You guys want to take a look at the market really quick? Hold on one second. Give me one quick second here. Yeah, I'm having I turned my computer off on the weekend and I tried to turn it on this morning and it wouldn't turn on. So I couldn't figure out what the F was wrong with it. I did order some I don't know, like batteries, and that worked. So I had them delivered and I just got them in a little bit ago and I put it in. I will say this though, they sent me enough batteries. They sent me enough batteries that I shouldn't need one ever or any more ever again. Yeah, you want to take a look at the markets? Hold on. Give me a second. Ah, shit. Hold on here. All right. Give me one quick second here. So on Friday, when we closed the door on Friday, right? We talked about. Let's get rid of all that. We talked about a gap up situation over the weekend into today, Monday, which is what happened, right? So this is let's go to a right there. $1,600 right there. So here's Friday's close. If you look back on Friday, right before we ended up closing the day out on Friday, we talked about how we were closing, and this is what I want to show you. This is a 4-hour this is a 4-hour candle right here. Okay, so notice this one candle right here. And as we closed Friday out, we said, oh, we could gap up into Monday. And I was asked on the show, would you take the trade? And I said no because of the theta burn. But we set it up earlier in the day. And how you could tell on Friday, we set it up earlier in the day. And how you could tell was due to these two candles right here. They were ramp buying this all day long on Friday, which kind of gave you a heads up that whatever the pullback would be on Monday, like if we had lost half of or if we had, let's say we'd closed Friday out like somewhere less than 50%, I would have expected that let's say we had closed down here on Friday. I would have expected a pullback, maybe down here and then to go higher. But these two candles right here this was letting you know that, that demand was like right here. You could see it. Like it's right there. That's demand. And that was demand right there. You can see it right there. So these buyers went nowhere. These buyers didn't leave on Friday. They're still here. They own the market. So we ended up squeezing it up today, kind of all day long. I think it was all day long at least until maybe the end of the day at 4 o'clock. I think we bled off a little bit. It looks like. And this would be. I'm assuming the Bears are going to claim this as a top again. I don't know how much I believe that's the top. We had some structural change last week on, I believe, Tuesday or Wednesday. We talked about it on the show, too. I said to the way we closed one, I think it was Tuesday or Wednesday, we ended up catching this new high. As like, it was a stupid new high. It was, I think it was this one here. No, it's Friday. Yeah, it was this one right here. So this candle right here, that was the one. I was expecting some kind of a pullback over here, like a failure on that candle. Like we'd come up here and then we'd have a nice pullback to the daily trigger and we'd go north. Now, when we did not do that, we were like, bam, there's your new high, quick pullback, and we're off and running. Hold on a second here. Sorry, I'm just turning on my setup for the first time here. So this was the key right here. This is actually where it began. It actually began back on, we had this nice little sell down over here, right? Sell down, and right here, I want to say that it started on Tuesday at 12 p.m. The moment that you got that new high, the market changed. Tuesday, 12 p.m. last week. You got that new high, and that was it. You're off and running. As soon as you break past that prior high, the way is higher. It's not lower, and they're going to take it as high as they can. Now, even Elliott Wave changed on that Tuesday of last week, on the 8th at 12 p.m. Even the outcome in Elliott Wave, it was like big time eraser time. And instead of getting a pullback for 6,000 end of year, it's we're gonna go there right now. And I think we talked about that on Friday too. That we're gonna go. I think I even charted that Friday morning. I charted that out for you. I did Friday morning. I charted out for you that we're gonna go straight to 6,000. Like there's no all gas, no brakes, as fast as possible. And I think we're still going there. Like right now, I think the rest of this week is like literal vertical to, or at least on SPY. Or hold on a second here. At least on SPX, like this literal vertical move to 6,000, which is up here, as fast as possible, like vertical. But there's a caveat. I charted this for you on Friday. I know I did in the morning. The end result from that straight vertical is a major correction, and this could all take place like this week, like straight vertical to 6,000 and then a bloodbath, followed by a bloodbath. And it all started last Tuesday at 12 o'clock. That new high changed direction of the market in a meaningful way, and you saw it play out today, and you'll likely see it continue to play out, in my view at least, until we meet some real resistance. Not only that, but our call wall. This was local resistance was lower. It was right here. And the call wall was, so this was local resistance, right? We broke above it this morning. And 58.50 is now support. So local support has now raised at the end of the day today. This is now here. And your call wall might even be higher. Let's take a look at it right now. We'll look. I think your local resistance is now 5,900. Let's check. Let's take a look at it. Let me bring it up really quick and take a look. Let's look together here. Hold on. 58.50 is now support. Local resistance is hold on here. Let me go through this with you guys, and then we'll draw it out in the chart here. So this is 58.50, right? We've broken above it. So this, until it's broken, is now support. There's a brief roadblock here at 58.75, and 5,900 is kind of the target. But not only that, you've got two more bands here, 58, 59.50, and 6,000 would be top of the market right now. I don't see anything else being top of the market right now. Let me take a look over here. So your target right now is 5,900. I said 6,000, but I'll tell you what, though, if you trade up to this 5,900 and you develop call, I mean, I don't think you're going to develop calls above 6,000. It'd be crazy to do that. Not crazy, but even if you did, we'd likely still reverse to the downside. I would give theoretically, I would give a target of 5,900 with that correction happening. From that point, even if you got development the problem is if you get development at 6,000 but not any higher, we won't hit it. So if we develop these calls right here, we won't actually trade that 6,000. You need like 6,200. You need like all of this stuff to be developed. Like, hey, we're going to trade 6,200. We're going to trade 6,300 to be able to make these jumps and then maybe swing high and then back down to the downside. And I don't know how we do that. I don't know how you would tell the market we're going to make mission to Jupiter or something. Forget Mars, we're going to Jupiter. I would say 5,900 is the target. Even if you get all of this gamma up here, it's already there. So that would be the target, 5,900. So anyways, now this 58.50, there's 58.75 right here as a speed bump. So let's go back to hold on here. $5,900. So your call wall is right here at 5,900. Your local resistance is now 58.70. And your local support is here at 58.50. And I don't think you go under there. I'm looking right now. There's 152 million on this support. So even though this is your local resistance, it's not a big resistance. I would expect any pullback to be bought here to trade this. Now, LA Wave has us going to 6,000 up here to this target up here, the 6,000 target. But I don't believe in it. Elliott Wave is wrong all the time. It's not really tradable. I think that's kind of like a end of the year thing, possibly. Maybe you hit 6,000 end of the year, but the Elliott Wave does have us going there like right now, in a hurry. I don't know what could do that. Earlier today, and the reason I don't believe that is because you have to develop this stuff up here. Someone has to believe that we're going there. Like, we're going to 6,200. We're going to 6,400 before end of year. I find that hard to believe. I think it's hard for the market to stomach that right now. And I've seen that before where there are these numbers, like big round numbers, like 5,000, 4,000, 3,000. I've traded them before, and whenever you trade them, no one's willing to buy calls above. So the market stalls before you get there. Like, I'll have to go back and look at the history of this, but from my recollection, no one's willing to buy calls above 6,000. So you actually fuck around near that number until the market believes that they can trade above it. And it's a big psychological step for the market to trade above this number. So, but you know, there was, find this for you. So McGilligot came out today and said pretty much what I said on Twitter. I think last night or this morning. I don't remember when I said it, but I've said it to you already many times. McGilligot said the buy side has been forced to overhedge by risk management. And so we have overhang risk. Here, let me show you this. So right here, this was that Tuesday, right? When we rolled down on this Tuesday, I think I told you that, like, put gamma on 4,800 and 5,200 went bananas. It went stupid bananas. Like the put buying for 48 and 5,200 was insano. And the sketchy part about that put buying was it? I think it was 4,800. They bought like 4,800. Let me show you this. So they bought puts for 5,200 way down here and 4,800 way down here. And I mean like massive put buying. And when they bought all those puts, those hedges, it sent us higher because we had no event tied to that hedging. So we've got like, or at that time we had strike. We had strikes, 2 hurricanes, right? We had a port strike, 2 hurricanes. We have election volatility. We have, or at that time we had 2 hurricanes, a port strike. We had election volatility, Israel, Iran, and Russia. Russia, Ukraine, and like a little bit of Taiwan, China, all bundled up, right? So you're kind of like, as we're doing this pullback here, no one's hedged, and then all of a sudden they are, and none of these events go as bad as they could be for the hedging that took place. The hedging took place for a crash, right? Like an 8 or 9% downside move at the worst possible price. Literally, I kid you not. I think it was a little bit over here. It was over here. This was on third. Look, go back and look at the put buying on Thursday, October 3rd. Thursday, October 3rd. Look at the put buying that came into the market that day. It was out of control. It was insano. And we talked about it on the stream and in market briefs how much put buying actually took place. And so we have all this volatility, and everyone's waiting, including myself and everybody else out there saying, oh shit, we're going to crash, and we're going to have this or that, or the hurricanes are going to wipe out Florida. Florida's going to break off the country, and you're going to have a war and all this other stuff. And that stuff didn't come to pass, did it? The port strike, they came to a tentative agreement. The first hurricane was bad for a portion of the U.S., for North Carolina, parts of Georgia, and I believe parts of Florida as well, but not that bad, right? It wasn't that bad. That stuff has to be tied into an expanded war in Iran and Israel, and that didn't happen, did it? Did not happen. So what happens? We got all this volatility, all these events, and we're waiting for just one of them or multiple of them at the same time, and they start to solve themselves as we're hedging for that 5,200 and 4,800. And now we're hedged for a crash, too. None of those events happened in here, did they? We didn't get those events in here. And so what happens is the market blasts off, right? We're now well hedged, and we've got none of we're rear view mirroring all of these events. Now we still have the overhang of Iran and Israel, and we still have election overhang, right? And remember, those puts were bought right around here, right? So what's 8 or 9% from down here, right? If you have a crash or something like that, that's right around there, isn't it? That's what's 9% right around there, right? Let's take a look at that again. And there it is right there, right? So you get, here's 6,000. I don't think we get there. There's 590, right? I think we get there. And what happens there, right? They've now accounted for earnings season. They've accounted for counter trading, all this hedging activity. And even if we head down here, it's not as bad as if we had dropped right away, right? The payout is not the same. We've left that volatility behind us. It's not as bad anymore, is it? Like you squeeze up here, and they've wrecked your hedge at that point, haven't they? Just like pure puts, right? Just pure fucking puts. You can actually trade this now. You can actually trade like 5,300, 5,500, and the market's fine, right? And I think that's where we are right now. Is basically, get rid of that. Really, let me just get rid of not all of it. Just get rid of this. I think right now, basically, the market is well hedged, and I think we drew this out on Friday, which would be some kind of an attack up here, and then a correction down below. You fulfill all these puts, right, without paying them out, and then we're back off and running again into the end of the year. So you've got there's December 31st, and you still get to actually trade 6,000. So let's put that down to 9. You get to fail 6,000, come back down and find that support that you need to actually break above. And how do you break above this? Is they throw it up when you're not ready for it, right? You're not prepared for it. It's end of the year. You touch it, and they find out if you want to be there or not, right? You can't find the support to get there. You can't find the buyers in the 620s, 610s, 630s. And so what you wind up doing is they sneak it up on you while you're not looking there for the first of the year and say, look, yay, we're up at 6,000. Now we put you there. How does that feel? And McGilligot came out and said basically what we already told you, which was the buy side has been forced to overhedge by risk management for a bunch of events occurring simultaneously, yet into a likelihood where you don't get any sort of worst case scenario. Out of the hot zone for Israel-Iran, U.S. election gridlock remains chalk, U.S. unemployment data staying firm enough, U.S. fiscal spending and still elevated prices equal higher NGDP, all while year-over-year disinflationary trajectory continues and allows for soft landing insurance cuts from the Fed. While Roe is in the deepest policy cut cycle since April 2020 COVID, and all as China stimulus is being released to stabilize the housing sector, while credit M2 growth is accelerating above estimates. Hence, you're likely going to get a big stress release thereafter. That was this afternoon at 2 p.m. He also went on to say, we are set for a scenario where we push through said risk events and downside hedges, right? So your downside hedges are right here. This is where the hedge is. They came out on Friday. Not Friday. Yeah, no, they came out right here. They came out right here on October 3rd is when they came out. So here's your downside hedge. None of the events materialized. And so we push higher now, don't we? Push higher until those hedges are almost worthless. Okay, so you push through said risk events and downside hedges, which are quite obviously dragging performance right now, right? They've been a drag on the market. Then bleed out further as spot rallies, and they go deep outside the money, which means dealers buy back buku delta as hedges are unwound, helping implied and realized vol leak out premium as a further Vanna tailwind into December end-of-year expiration, just happening to occur at the most illiquid time of the year. That's that push up where we actually trade that. We blast past that 6,000. Just happening to occur at the most liquid time of the year alongside corporate buyback flows as well, all with systematics that mechanically forced to add back exposure in uneconomic fashion as discretionary fundamental chase back into upside too, as they've been significantly undercapturing the rally this entire time due to the original scenario laid out. So let's talk about that part too. What McGilligan is saying, which we have not discussed much in recent months. And what he's saying is, as discretionary fundamental chase back into the upside too, as they've been significantly under capturing the rally at this point, or the entire time. These are the elephants. These are the corporates. They're always like late stage participants. If you remember in the rally in 2020, 2021, in the last 9 months of 2021, that was all corporates. That was all like JPM chasing. It was all like Goldman Sachs, like big money, chasing the last of that rally, and this is the last of that rally as well. Now, McGilligan didn't say today. If McGilligan didn't say we're going to go straight up here, we're just going to go straight fucking moon. We're going to trade 6,500 end of year. He didn't say that in this statement today at 2 o'clock. And I do expect that we have that corrective move to the downside. Now, I showed you on Friday that everything changed, right? I was like, everything's fucked. Or I think I told you on Tuesday it changed. But I was like, I just want to see Wednesday and Thursday and see what that price action is, and I'll let you know on Friday, right? And so then we came and did the show on Friday morning show after dealing with the Tesla. Oh, God, the Tesla gang. After dealing with the Tesla gang, I showed you, I charted out for you the path to 6,000. Now, I think we fail that. I think there is like a tease that we're going to trade 6,000. And we fail that. We have that corrective move and account for all of that bullshit hedging. Now that it's worthless, right? It means nothing now, right? We can then go there. And then we trade that actual 6,000 end of year. So, saying all of that, right? Blah, 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 blah. And noticing on Friday at the close, if you were here in the show on Friday at the close, I said to you, wait a minute, this last 8 hours is all buying. It's like buy, right? If that's the case, what was the price action today? More of the same, wasn't it? So you got more of the same today. This is a 4-hour chart, and it's like buy. Now you've got these sellers here, right? They're telling you, no, we're not going up there. But this is the instigation, right? This is the instigation, 78 and 80. And if we go down here, wrong one, hold on here. And we look at Gamma. This is that same zone on SPY, isn't it? This is 5850. Right? Switch back over on SPY again. God damn it. Hold on a second here. This is SPY. This is that same zone right here. This is the right here, that tick. That's 5780 or 5850 on SPX. So, on there. So that's your 5850 on SPX, right? And here's your 590 up here. And this right here is 5875. Right about there. Right about there is 5875. So 592. I'd do 590. And then 592 and a half. Right about there. Hold on here. Somewhere in there. Get that right? I think I got that right. It's roughly right there. I'm not looking at it. I got a different screen open right now. But the key points here would be this, right? We're coming into Tuesday. You've got a 4-hour bar right here. Hold on here. Let's check out the daily candle too really quick. You got this gap closure down below, right? That may get closed or not. Doesn't matter, but you got one right here. We're moving up again right now. We should be trading futures together. You got, and then look, this is the hourly candle, so we're going to raise that up. And to boot, you've got another one right here. This was end of the day. Right there, you can see it right there. This started at 2 o'clock this afternoon, 1 o'clock this afternoon. You can see it. See it right there. It started at 3 p.m. Super ramp, right there. That's a 30-minute basis. There's a 1-hour basis. You know that's top right here at 590-ish. 592 and a half on SPY is about 5,900 on SPX. So, you know, what about that gap down here, Cap? Yeah, we can chart it, but it's not gonna be. It's not required for us to go there. It just isn't. It's just not required. In any way, shape, or form is it required? It just isn't. The only requirement that we have right now is, here, let me look at this one more time here. And that shit is vertical. Look at that. I mean, I would say that just been looking at this really quick here. That daily is not required. Like none of that's required. None of this shit here is required. Woo! Could be an argument made that we come back down here and we still capture. That's the 21st. There's the hedging activity down here for 5,200. We're back off and running again into the end of the year. Just that way. But there's still no requirement for it. There's like literally no requirements. 1, 2, and then whatever that is, 3. And you got a larger one, an even bigger one back there. That's like worst case scenario too. That's like worst case scenario. Hold on, give me a second here. You know, some kind of insanity like that. You know, just like stupid moon into the end of the year. I wouldn't be looking at that up there, but not that exact pattern, but something like that, right? You go up there, you fuck around with this 5,900. You guys buy a bunch of 6,000 calls. It reinforces that that's the top. We come back down. We destroy all those 6,000 calls and maybe some 6,100, 6,200s, and then we come back up here once those calls are dead, and we actually trade that 6,000 up here end of year. Excuse me. But just note that I showed you a few minutes ago that that gamma. Let me show that gamma one more time. Hold on here. Yeah, I wouldn't be buying puts here. I'm assuming that everybody's bearish in it tomorrow as well. I'm going to assume that everybody's bearish, but I wouldn't necessarily. I mean, you could be kind of bearish, but not really. Here's that gamma bar. This is 58.50 right here. And this right here is 5,800. There's your 5,900 right there. There can be an argument made that 59 is top of the market because of how strong it is, but I bet the gamma comes out tomorrow for 6,000. So 5,900, 58.75, 5,800. Yeah, that's pretty strong, right? 5850, and even 5800 is strong all the way down here. Like, this is buff. Like, this is super buff here. It's something like that. And even if you and this is 152 million here, and this is 133 million here, pretty supportive. So like, so even if you draw this, and you're like, yeah, we're gonna maybe come down a little bit more, the target is definitely up here. And even if any of this even if we get down here and close that gap, it's all supportive. And I think that's what McGilligot's saying, is that it really doesn't matter what the pullback is. You've got flows just piling in the market right now. Yeah, I don't think puts are bad for tomorrow necessarily. I just I don't think that it's as doom and gloom as you think. Or that it's supportive or it gets bought. Hold on a second here. Hang tight 1 second here. Sorry about that. I apologize. Like this here, I'm telling you guys. I'm gonna warn you guys right now. We can just blast up here, like just not quite vertical, but this is nothing, and that's nothing. Just like crank. Oh, you can't see it. Sorry about that. Damn it. It's nothing for us to blast above, straight here, and straight up. Like, there's no requirement that we come back down here for this stuff. There's none. They're in like a buying frenzy right now. Like, that's all I got for you guys. I don't know what else to say to you. Let me check the after hours right now real quick. And let me show you something else here too. This is the other thing that's concerning to me. So, yeah, and they're squeezing it right now. Fuck yeah. Okay, so here's the other thing that's kind of sketching me out here. I know this is going to sound kind of lame here, but I ended up buying I bought LW last week, Lamb Weston, and they ran a bunch of bullshit on Lamb Weston like the past 2 weeks. They ran a campaign that it's going to the depths of hell. And this is Lamb Weston right here. And they have a small gap down here to close. So they have this small gap down here to close. Now, like all these fucking bears were talking about like Lamb Weston going like doom and gloom on not necessarily McDonald's, but the French fry provider. And so I opened up the stock after they were dooming it, and I was like, wait a minute, these guys just pulled this stock back. Let me put this on a weekly. I'm like, so this is Lamb Weston, right? And I'm like, these fucking guys ran this stock down to like pre-COVID stuff or COVID stuff. Like, that's a COVID low right there, isn't it? Yeah, it's a COVID low right there. Like, you don't do a COVID low, and then you've got like market doom in March of 2022, and then you've got more doom after a nice run. And so I'm looking at Lamb Weston the other day, last week at some point, and I longed it. I bought it, and I noticed that there were 2 giant gaps up here, and I was like, well, they can't leave these behind, even if they're going to zero. Like, there's no fucking way they're leaving that shit behind. And they're running a sell program on like CNN everywhere. They're doing like stupid fucking articles all over the place on how Lamb Weston's going to go bankrupt. It's like the potato maker for McDonald's, and I'm like, that doesn't make any fucking sense to me. So I bought it. And what's it been doing? It's been vertical. It's been like straight vertical, chasing this gap to the upside. So I'm like, yeah, I'm going to use Lamb Weston. I kid you not. Like, I'm going to use Lamb Weston as my, the market top. I don't know if we go there today, tomorrow, whatever, but I bet you that I bet you that just below, and that's 76.13. I bet that we top right below $75. So I won't even draw that up there. I'll even hem it in a little bit. I bet that the market like tops right in there. And then we go down there and mess with that bullshit down here. And then into the end of the year, we take out that last gap up there. Now, that's May and June. I bet you it's even sooner than that. I bet you it's like, hold on here. I bet you it's even sooner. How do I do that? I don't use Webull, so I apologize here. We go up there, right? Nail that thing down there, and then we're like off and running. Whoop, sorry about that. Some kind of goofiness like that. I digress. I digress on Lamb Weston. It's something like that. And then we can deal with like Doom for 2025. And Lamb Weston's not trading. I don't see how they would take Lamb Weston on like a potential recession in 2025. Like right at, it's trading $52. That doesn't make any sense to me. Like I get that some meme stocks maybe take them to zero, not zero, but you exit that spec growth meme shit. But like Lamb Weston is like a, it's like the backbone of America. When you look at that backbone of America type stocks, if they're gonna take them out, like trade them down to like $2 or $10 or $20, it's usually a big deal. It's like when Costco sold in 2022. Remember when they started nailing Costco and Costco was blooding like hundreds and hundreds of points? I don't disagree with that if we're in a bear market. But if we're not in a bear market yet, how do you do that to Lamb Weston? I'm just like scratching my head going, that doesn't make any fucking sense to me. We're already at the COVID lows on this stonk. They make fucking French fries. They fucking bottle water that you need to drink, basically. Right? And so I'm like, that doesn't make any sense to me. So I would expect us to at least have some kind of a buffer if that were the case. If they were going to shank the market or the economy or something like that, they would be, they would leave some room for it. God damn it. They would leave some room for it to do that in 2025. Even if it went to fucking $10 or $20 or $30 or whatever the hell it is, you're not going to start down here on Lamb Weston. It ain't going to happen. Not in our lifetimes. Never. So I'm using Lamb Weston as that tool for myself right now. And it's proven itself. It's gone up every day. It literally green bars up the entire time. Like green bar, green bar, green bar, green bar, green bar. Every single day. It just doesn't stop going up. Did I see the Bloomberg stuff on Tesla? Yeah. The Tesla bounce today, which was good to see. They made good commentary, though, right? They pretty much said what I said, right? You need to Tesla is. You guys want to look at Tesla really quick? I love Tesla. Don't get me wrong. I love Tesla. Let's see if we can go there. Hold on, let me go to Tesla really quick. Nope. I love Tesla. Like I care what Elon's doing. I wish Elon focused on Tesla, which he doesn't. There's a lot of stuff he's been saying too, which makes sense, right? He talked about how Tesla depends upon Elon or on Trump winning because of the trade tariffs. I don't know if I believe that. I think you're getting tariffs regardless. It's just some people are like, well, he'll do more tariffs than I don't know, Kamala Harris will do. Elon's pretty honest. Like, he's an honest guy in a lot of ways, or he has moments of honesty where he said, um, car companies go bankrupt. That happens more frequently than it doesn't happen. And he seems to think that Trump tariffs will help Tesla. Not getting political here. I don't trust Trump to do those tariffs. When we were in 2020, in my view, Trump used, I used to call it Gyna trade on and Gyna trade off. And he used it to like trade the market, I think. I really, truly believe that Trump was trading the stock market back then. And he would say, like, the Gyna deal is on, the Gyna deal is off, the Gyna deal is on. He would do it at the end and opens of markets. And maybe he will. I'm not trying to get political there and say, like, Trump's not going to do this for you. But Trump says a lot of shit. So I don't know why Elon has hitched himself to it, to Trump in particular. He should have hitched himself to both parties and said, I need tariffs. We need tariffs. I think it's okay for Elon to say that, to say we're an American EV company and we need tariffs on China. Because I agree with Elon on that, that we need tariffs. I do. I agree with Elon. But I think most Americans do too. That you have to somewhat save industry in America. We really are losing our industrial capacity, and it's very dangerous. So, anyways, not to stay on politics or anything, but with Elon and Tesla, you're trying to price in midterm revs. So when you go into an event like you did last week with Tesla, you're trying to gauge as an investor, can we make money off of this robot thing? Can we make money off of robotaxi? Can we make money off of robovan, right? And you need, like, it's all joking aside and all like the fun and games and the I love Tesla and I love Elon, I want to have his babies stuff. You need to have something to grasp, and at least in the midterm. The midterm is like about 5 to 10 years, believe it or not. 5 to 10 years. Think about that in your head. In the next 5 to 10 years, what can I price in? And the robots are not 10 years. We're not going to have them in 10 years. I'll just tell you that right now. You're not going to have them. If you do get a robot in the next 10 years, it's not going to be the robot that he showed you. And that's what we're looking for. That's the kind of robot we're talking about. Talking about the conversations here are about a robot replacing a human doing work, right? Taking care of your kids, he said, which is crazy. But that's the idea. And it's probably more like 20 or 30 years away. Remember, we don't want to lose industry, right? We have to, even if we're going to get the robots to do this stuff for us, it's like within 30 years. That's too long from now. It's too far out. I guess you're going to have to beg and hope that China population collapse actually happens and there's no confrontation between the U.S. and China in that time frame, which is real. That's real. There's a confrontation happening, and we're building into that before China has a population collapse, right? I think a third of their population will be over age 60 in the next decade. I don't know if you know that. By 2030, China's population is scheduled to collapse. They don't have a lot of time left. You know what I mean? Like they got to get a move on, and they are doing it. They're showing you that they're pushing their robotics ahead, aren't they? They're in like this mad dash right now to protect their own future. So, pricing in the robots, probably can't do that right now. Pricing in the taxi, maybe. You may be able to price in the taxi to be on the road in 10 years. 5 years? Doubt it. With what we saw that other day, I wanted to see, like, Elon out in the streets somewhere. I'll say this even clearer for you today. I wanted to see it's so simple. We all know this. He did it on Warner Brothers movie lots, which is what? It's fake. It's movie making, right? It's making magic. There are likely tunnels underneath that road to do work. There's likely a ton of power there. Like they have infrastructure for power. They have infrastructure for the internet, right? Big hubs, right? And they probably had engineers behind all of those facades running the robots and running the cars, the two vehicles, which is fine. But it shows that we don't have the infrastructure in place on the streets of America. Or he would have driven that car. He would have went to like Hollywood or Manhattan and said, well, let's do a premiere at this movie theater. And we already know there's going to be reporters there. And I'm going to show up with a tux on and a big white or silver, scarf on. And I'm going to get out of my car and then it's going to drive away or just pick somebody up, a rando on the street that hailed maybe a taxi. And you make an event out of it, a spectacle. And the stock would have went moon. Like it literally would have went moon. You would have seen Tesla trade $500 by 11:30 in the morning the next day. So the amount of money and time that he put into this presentation shows that that car is nowhere near hitting the road. And that's the problem. You can't price in that taxi right now for 5 to 10 years of growth. Like you could if he was if he just pulled a permit somewhere and did it on a road, and you let people like kick the tires, like people get into the vehicle, not engineers driving in the robo-van, not you behind a whatever you call it, stanchion with a rope across it. Like you needed to be able to touch it and feel it. And so, and how does that car charge, right? We already know you need the infrastructure for this stuff. So, do I think it's a death knell for Tesla? No. Is it possible they could price in some of the robotaxi? Yes, but it's not going to get priced in like you think it is. It's not going to be Moon Mission. I've been a Tesla investor for a long, long time. Like, they'll grind this out until he's about 5 years away from putting that thing on the road. And it needs clarification as to how it's going to make money. You can't have it like a people mover. Like Detroit has a people mover. It's not logical. It's not meant to move commuters every day. Where our people mover is, it's like a ring for the city. It could turn into that, but it's not that right now. We have people that say, well, we should run it year round and we should have back and forth service on this thing in Detroit, right? But we don't have that right now. So it's just a ring. It's like a ring on the finger. It looks good. Is it something that's like you could take as a commuter every day? No. And neither is that taxi. It's not that device yet. So, if that's the case, that's not true, you're gonna close the gap up here more than likely. You're gonna be given a chance to get out. Normally, you get a chance to get out. It's not like it's all doom and gloom. But I would be very concerned about. Your gap is right here. That's your target. But like I said on Friday, I think I said this to you on Friday too on Tesla. After all the crazies left, that I just said to you, could possibly price in some of the taxi, right? So this is the only thing I maybe add to this conversation would be you can do the wait and see as an investor if price is able to recover above the daily trigger, above the hourly trigger, and you catch a new high up here. You might be able to price that car in, that taxi, but I'll be honest with you, I don't see that. I see like a potential that you can close the gap up here, and then we're going to make some new lows. And I'm going to tell you why right now. This was the instigation down here. This was the instigation in that trade. And you could even posit that that was the instigation. So a trip lower, I think, is easy. I think that's easy. The real scary part to me is you've got Elon hitching his wagon on Trump. And if that's the case, right or wrong, I don't care. But Elon has stated that he has to hitch his wagon on Trump, right? Not Kamala Harris. I think he should have done both. I think he should have just said tariffs. And I don't care who wins. The reason I'm going to say that to you is because if he's saying that, this all rides on Trump and Trump loses, then that would make sense for us to go back and find that gap. Oh boy. And we got gaps, dudes. We got gaps like we got a gap at 43. We got some doozies right here. And we already traded this in January of 23. So this low right here was in April of 23. So if someone's telling you we can't trade down here, we just ran an entire bull market. And there, like that door down here is possible. I'll be honest with you. That door was not viable. If he had come out with a taxi like ready to rock, he should never have focused on the robots. I think we all know the reality on that, but you could be talking about some damage. You get underneath that stuff, right? And it's off and running. It literally is like off and running. Just like blood in this. God damn. Just pisses me off. And you know what the worst part of this is? It's October 14th. Like if you do tax loss harvesting this year, you got till the 31st, by the way, of October. You'll know this by then. Because if they start like sell program on tax loss harvesting, it could get ugly. This is January. Think about this real quick. This is January right here. And you're trading under on the year. Think about that. If you bought Tesla this year, well, not down here, but if you bought it, if you bought it up here first of the year, you bought it right here, you're still kind of you're in the money right now. But if they started trading this down here, you panic over here. This would be a panic moment for Tesla. If you get anywhere near this down here, this could just implode. Like it could get nasty quick. It's not good. None of this is good. This is all bad. So, as an investor, I would say you would need to see price get above a new high, on that high specifically, and then I would exercise caution. And you know what's crazy about that too is, it's not like you're like you can trade this gap up, get out, right? You can trade that gap up and get out. You don't need to be like exposed, be like, I bought the dip cap and now I'm going to go down with the ship. You just like trade the inside, and then I would get serious again, maybe there, somewhere in there. And you haven't lost anything. Like you don't have to have so much risk on to even have exposure over here. So if it was me and I was a Tesla bull right now, which I'm not, I'm pretty fucking bared up right now on Tesla, and I would be very afraid of being the bag holder in here. I'd be very afraid of like someone using you as their liquidity to exit Tesla into end of year. So it's not that it can't get better. It's just that, you know, you're a retailer. You don't have bazillions of dollars. You want to see this price action first. I mean, what are you really losing here? To wait for that to happen, right? You're losing nothing. Like you're literally going to be looking for, like, your patience pays you no matter what. Cup, I could have bought it at $216. Like, that doesn't fucking fly. You're talking about exposure at about 240. Roughly 240. You're like Johnny on the spot down here. Stonk's trading 218 right now. That's I'd say that's close enough for a little bit better peace of mind. You know, hey, we're above the daily trigger, we're above the hourly trigger. Let's rock and roll. Or just maybe some exposure in here, some exposure in there. Because if you want to be a happy Tesla bull, it's over here. If you want to be a happy Tesla bull, it's way the fuck down here. I'd buy that all day long, right? $80, 60, 70, $40. I think even Winky said he would buy it. I bet you a Tesla Bear would buy that. Like Tesla Q would buy that down there. So I wouldn't want to get caught up here at like 230, 220, and then we're trading $65. My face would melt off. I'd rather give up 10 or $20 to be above at 230, 240. Right? Do you see the disparity here? You know, would you rather be a buyer here and be like, yeah, you know what, I had to give up 10, $20? Or would you rather be a buyer here and, you know, all that nonsense happens? That would be devastating. That would be devastating. And then they price in the taxi and the robo van, and you know, you're trading back up someday into two. You're like carrying that shit for 5 years, 10 years. Like that's just like a bag holder in the making. So happy Tesla bull over here. Otherwise, big time trap. You know, like big time trap. Very dangerous here. Tesla, very, very dangerous. You want to talk NVDA? I've said to you before that I like NVDA. I've said to you this before. I'm going to make a warning on NVDA and all stocks in particular. I'll say it again. We are entering the last leg, likely entering the last leg of a bull run. Bull runs can last as short as about a year and a half. They're they're outside of range. That's about 5% of the time. Most bull runs last about 3 years. 5 years is getting out of range, and 6 to 8 years is very unusual. It's that very short range, like 10% of the time, 15% of the time. And we're about 2 years in. We have 1 more year left, possibly. That 1 year started this month, right? So I would expect more corrections, more corrective behaviors. I would expect collapsing down into a quality. And I would expect volatility along the way and collapse down into quality. And I would even make a posit that as we come into the 6-month mark, that's about what? October, November, December, January, February, March, right around March, that you are collapsing into indexes. So by the spring, I would be even out of NVDA. NVDA trading $138, coming into its prior high right now. Hold on 1 second here. Hang tight, my computer is slow right now. Sorry about that. My computer on my end is super slow. I just need a second here. Come on, show it to me. There we go. Thanks. Sorry about that. Hold on. I got a text coming in. That's a bear trap right there. Whew. God, Tesla bulls got to be pissed. Parks right in right there. Normally, I would say, okay, so let's talk about this. Okay, so normally I would say NVDA. I would expect the sell to come in, and they're gonna like fake you out here, straight down. Normally I would say sell 140, 145 ish. But I think we're going above 150, so I personally, for continuation to the upside on NVDA, I personally would like to see the failure of 150 to come back and trade the 150. I think that this is like we're here. We're started down here, right? And we had a major pullback up here, right? Bam, bam, bam. This makes sense here, but I think because of what the intent is, we're going above 150. That you're gonna get that we had the attack back here too. Like so, there's a bunch of stuff at play here. Like they caught you off guard here at 140. Like, we're going to 150, bro. We're going to 150, right? I told you we weren't going to 150 or whatever the price was back then, but we actually bought this together. Remember? Um, I want to say that this time you're gonna trade 149, 148, somewhere in there, and then you're going to get over it afterwards into end of year. That'll be your, like, I don't know, AI is the king trade. And this could come December 31st or even March. I don't know if it's like right now or it takes until March or February. This could take all the way out there, and there could be a little bit more doom down here if market were to correct. You might even go as low as down here. You could trade 110. These can extend. This can fail. That can extend. But I would like to see that failure there. I would like to see like the attempt at 148. And then I would like to see by end of year 150. This is a big question mark down here. This is a question mark, but like anything, you know, the way forward is likely the shovel and not the AI, right? We have that with Tesla, don't we? We proved that this past week, didn't we? Building the robot is harder than building the chips for the robot, isn't it? The chips are a reality, and we can see right now that they're going to need more chips, aren't they? So the money is in the chips, isn't it? So push it up, trade just under 145. A little bit higher, about there. This one could be right. Oh, this one could be right about there. And there's your failure. Bam, bam, bam. Roll it down. That's gonna piss a lot of people off, isn't it? Market's gonna make some. The market is going to fuck these bears over, I think. Like the market's gonna be like wham, wham, wham. Oh boy. And I want to show you one last thing before I leave you. I want to show you. I'll be on tomorrow. The computer's fixed. I fixed it, but I want to show you one last thing before tomorrow. Okay. Give me a second here. I want to show you one more thing. VIX 9-day. I want to show you this one last thing here, okay? Is in the buy zone, okay? I want to show you this time period right here. This is right about there. Let's call it right there. This is September 19th until September 27th. September 19th, September 27th. Let me see here. Are you paying attention to that, right? That's VIX 9-day. Pay attention to that, right? Pay attention to that right there, right? And we're going to do an overlay here in just a minute, but hold on a second here. Shit. You see that gap up? see that gap up? Right there, same time period, right? And we just ground. It's like kicking and screaming. Notice, too, that the pullback was not that deep, right? That's election volatility. It could go deep, but I want you to think about this right here. Now, this is important. So Like SPOOs, SPOOs could be like, we're not even there yet. This gap hasn't even happened yet. So this would be more representative of where we are, like right here. We're actually right here. Up, down, right? Slam it, right? Slam, 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 paid trade, right? So, this was Tuesday. Brought us right back down, right? Right back up on Wednesday, right back up on Thursday and Friday. So, when you're looking at this here, when you're looking at this right here, right? They did the initial gap up, right? Come back down to reality on Tuesday, Wednesday, bam, right? Thursday, bam, bam, bam. You get what I'm saying? So you get like that like, I want to short the fuck out of this day today. Like, I'm assuming that everybody today was like, I'm going to short the fuck out of that close. And it's possible we roll down, but there's likely like a fucking for the rest of the week until that happens. So just be careful of that. just be careful of VIX 9-day down. See the VIX 9-day down here? Be careful of like another gap up into Tuesday or Wednesday. Right? That kind of shit. And then it finally rises. You get what I'm saying? All right. If you don't, you will. So just be aware of that for the rest of the week. Be aware that all dips will likely be bought this week. Any pullbacks, I would expect to get bought. If you did not buy that close, if you did not buy that close, then look to buy a dip tomorrow. Hopefully we can catch a dip and continue to make this grind higher and higher and higher into the weekend at least. Price target on SPY 589. First target 565 and a half, or 560, or excuse me, 586, 587 and a half, and then a failure at 589 ish, somewhere in there.